Look, I know how exciting it is when you found that perfect home, your offer's accepted, it's in escrow, to start thinking about moving in and how you're going to decorate it. But there are some key things that you need to keep in mind before that deal closes. So today, I'm going to discuss a few things you may not realize that you need to avoid that could seriously jeopardize the purchase of that new home. So let's get into it. First, do not deposit large sums of cash. You see, lenders, they need to source where that money came from, and cash isn't easily traceable. So before you deposit any amount of cash into your account, it's really important to discuss the proper way to document your transactions with your loan officer. Do not make any large purchases. It's not just home-related purchases that could disqualify you from your loan. You see, any large purchase can be a red flag for lenders. People with new debt, they have higher debt-to-income ratios, which is how much debt you have compared to your monthly income. And since higher ratios make for riskier loans, borrowers may no longer qualify for that mortgage. So you really need to resist that temptation to make any large purchases. Do not co-sign loans for anyone. See, when you co-sign for a loan, you're making yourself accountable for that loan success and repayment. And with that obligation, once again, comes higher debt-to-income ratios as well. I mean, even if you promise that you won't be the one making the payments, your lender is still going to have to count those payments against you. Do not switch bank accounts. Again, lenders need to source and track your assets, and that task is much easier when there's consistency among your accounts. So before you transfer any money, again, speak to your loan officer. Do not apply for new credit. It doesn't matter whether it's a new credit card or a new car. You see, when you have your credit run by organizations in multiple financial channels, it's going to have an impact on your FICO score. Keep in mind, a lower credit score determines your interest rate and possibly even your eligibility for approval. Do not close any accounts. You see, a lot of buyers believe that having less available credit makes them less risky and more likely to be approved. But this isn't true, because a major component of your score is the length and depth of your credit history, not just your payment history and your total usage of credit. So closing accounts has a negative impact on both of those aspects of your score. Do discuss any changes with your lender. Just be upfront about any changes that occur or you're expecting to occur when talking to your lender. I mean, any issues that you may have with income, assets, or credit should be reviewed and executed in a way that ensures that your home loan can still be approved. So if your job or employment status has changed recently, share that with your lender. I mean, it's just always best to fully disclose and discuss your intentions with your loan officer before you do anything financial in nature. Bottom line, you just want your home purchase to go as smoothly as possible. So before you make any large purchases, move money around, or make any life changes, be sure to consult your lender. Someone who's qualified to explain how financial decisions may impact your home loan. I'm Scott Duns, and if you're looking to buy or sell a home in North County, San Diego, let's work together.